Okay, guys, I thought I had the recording started, and I see I don't. Well, now I do. So here's where we are. MeBob right here, closed below, sold at the market. I was filled here. We have an IOI. What I would suggest here is a stop loss, moving it down to 87.25, because what do we know about IOI? It's a breakout pattern. We also have an OIO, also a breakout pattern. But if price breaks through here, as it just did, odds greatly increase that we're going back to the top of the MeBob because of this IOI. So that would be a losing MeBob trade coupled with the IOI price action. However, using the original MeBob, what do you call it, rules, we'd still be short from somewhere down here. 70, close was 77.50, so 77.50, 76.50 was the short. We've also taken the high of this, I believe. So now what would confirm that getting out was the right thing to do is, well, does this bar close above this level? And if so, does price ultimately take out what would have been our MeBob stop? I'm sorry, guys. I'm doing some work here. Took off yesterday and told them not expect much from me today, but I'm doing some admin type stuff from home. So again, the IOI. I think you could even have used this inside bar high as your stop, because after this, price came down, and once it retraced half of it, it was not only likely that this would be an outside bar, but that this was a third test of the open. So this would have been let's call it an orthodox wedge, but anytime the market tries three things, so tried here to trade and fill the gap, tried here to trade down and fill the gap, tried here to trade down and fill the gap. Anytime the market, this is right out of Al Brooks. Actually, I think he might say 2 times. I think it's 3 times in reality. But anytime the market tries to do something 3 times and fails, it's likely to try the opposite. So probably should be expecting price to once again to challenge this level or the previous, so somewhere between yesterday's high and today's high of day. But as I said in last night's MeBob review, once you're in a MeBob trade, especially when you had made a lower low than the entry bar and the signal bar, or if we were long, you made a higher high than the entry bar and the signal bar, I think it's appropriate to start trailing your stop below the high of the 5-minute bars. Because if this trade's going to go to profit, it's probably going to not take out previous 5-minute bar highs on short sales or previous 5-minute bar lows on long trades. For example, an IOI long entry would have been a buy stop at 87.25. You would have been stopped in here. Stop. If you're trailing your stop, you could move your first stop was here. This bar closes, stop goes a tick below the low. This bar closes, stop goes a tick below the low. However, if you're long on this, your profit target should probably be about a point below this tail. High was 99.75. Look for 98.75. High was 99.25. So about an 11-point profit on a price action basis. And I'm not talking much, so sorry for the long periods of quiet. I am not playing the music. I had someone on YouTube comment not to play music, and I got 2 private messages at Forex Factory saying that the music was distracting. So this is the way we're going to do it. So if we see 5,600 even, there it is. So this would have been a losing MeBob trade regardless. Either a rather large loss. I think 5,600 down to 77.50. So that's 22.5 points. That's a lot to risk. That's why I prefer, and my intention has been since the beginning, to incorporate price action concepts into the MeBob plan. Because, frankly, most likely your risk should have been lowered to 82. So that would have been less than 5 points, or 87.75, which would have put you right around 10 points. If you're going for a 10-point target and you're risking 10, 11, 12, that's, I think, fine because our win rate's going to be relatively high. I do think risking 20 plus points for a 10-point profit target is, even if it were to test out over time, I would not be able to continue trading with 20-point stops and 10-point targets, unless I were winning, 19 out of 20 trades perhaps. So we might get a MeBob long up here. It'll be a little unfortunate in that we might be too close here, but we have 3 attempts by bearish traders to attempt to take this down to fill the gap. Big gap up, so there's a lot of bull energy coming into the open. So if we get in, maybe this will make up for our loss here. But I do believe this, once this bar closed, maybe not once this bar closed, with this closing inside, my stop would have moved down to 1 tick above here. Once this bar traded below the low of the signal bar, then I would have put my stop either here, or if this bar had made a higher high than this bar before it made this low, then my stop would have been above whatever the high here was. Yeah, so the way I used my stop, it was about my gross loss is $541.68. So that means I lost $537.50 plus my commissions. So that's 10 3/4 points, I believe. And again, I really think the appropriate stop on this trade at this point was 82. So, and again, I think my entry, let's see here. So my short sale was filled at 76.50, stopped out at 87.25. So 76.50 to 82. Whoops, I gotta buy. Oh no, what's this? This isn't right. What the heck happened to my, what the heck was that? My trading DOM was way off on that. So my entry's at 1 1/4. I'm going to try to get filled at 11 1/4. And my initial stop loss I'm going to put here. But again, once this bar closes, especially if it makes a higher high than this bar, I'm going to put my stop loss at 97.25. I am going to wait for this bar to close. But again, when this bar closes, honestly, when this bar closes, if it closes above this bar or above yesterday's high, I think it would be appropriate to put the stop loss at 5,600 even, one tick below this low. So for the first bar, just in case there's some weird algo kicks in, does a quick spike down, spike up, I don't want to get stopped out on a move like that because I get ticked out and it spikes up and I don't have any time for my brain to react and get back into the trade at an appropriate level. Also, if we trade to this high, 7 3/4, again, I think it's appropriate to tighten your stop because we could get a double top up here. In fact, here's the high. That's the 5-minute close. Make sure this is set right. That's 7. Ninja Trader's a little finicky in their drawings. So next week I am going to be incorporating price action stops for sure. We had a good run last week and this week with the MeBob trades running more or less right to target. We did discover that if you, for example, here we had a losing MeBob trade. If this one turns out to be also a losing MeBob trade, then we will, at least I will, retire the MeBob reference region for the day, and there will be no additional MeBob-based entries. So 2 losing MeBob trades in a row indicates a trading range. This is certainly qualifying as a trading range day. We need a breakout attempt to reach our profit target on the long. And not just any breakout attempt, it needs to break this high by almost 4 points before reversing. Coming in for a close here. So even here right now, do we need to stop here? Probably a tick below here would be appropriate on the initial entry. Okay, what is this price here again? 97.50. I'm gonna put it actually below the open of this bar. 96.25. That's a $250 risk. And if this is stopped out, I'm fine with that. I'll be down around $800 for the day, but still up nicely since the beginning of Project MeBob. Price action wise, I do expect to be stopped out. This triggered another sell. We had a wick left through the previous day's high. It's a second failure at the high, so we have a double top. In the grand scheme of things, downtrend, one leg up, two legs up. So this is just a bear flag in a downtrend unless the bullish traders can force a breakout to the upside. And I chose to put it below the low of the open of this particular doji because in this situation we have basically it's a push up, down, up, down. So we could get a wedge, and the break below the open of that first push up would trigger a retrace either to this low or this low or this low. Depends on where. If you were to watch Al Brooks's course, most trades that take place in the ES are by computers that have been programmed. And I know everyone thinks there's some mysterious algorithms out there running the market, but the computer programmers, they all use math and numbers. They have the same levels that we do. There's not some magical level that they have access to because they have PhDs from Stanford and MIT that we don't have. The only thing they have that we don't have is they know which level they're picking for their targets, whereas we can only identify that this would be a target, this a target, this bear bar a target, this a target. That's all we can really say. But that doesn't mean that we can't compete with them, participate with them. So now here we're coming in for that test of the high. See if we can get the breakout and get that profit target filled. You can see here, the low was 96.75. This open was 96.50. Okay, 850. So we got less than 3 points from our target at the high. We need a real spurt of volume here to get us up there. And at this point, I'm going to just say I'm going to put my stop maybe 2 ticks up. We're less than 2 points. We're at 2 points from our target. 925 was the high. Target filled. Okay, we got that. So for me, for the day, my net loss is $45.86. Had you used the MeBob range high for your stop loss, you would be down probably close to $600. And if you had instead used this inside bar high as your stop loss, you would be up probably, I guess, about $200. So that's it for the week. Let me spread this out. So again, we had IOI. I'll do the review tonight. I'm not feeling well. I can't remember if price made, I don't know if the high of this inside bar was taken out before this low was made. If the low was made first, stop loss at the high. If the low was made after an initial break of the high, then whatever that break high was, I put my stop there. But going forward, next week I'm going to continue MeBob entries only. And what that means is, for example, IOI, this is an entry, would have entered long here, profit target here, or the previous day's high, or the high of day. If you had trailed your stop below the low, you would have been stopped out at 600 even. You would have entered at 87.25, so almost a 13-point profit. The IOI is going to be one of our price action setups. It'll be a defined setup. It will, if we're in a MeBob short and we get an IOI where we're going to bracket this for long, this for short, we'll not bracket this for short because we're already short. What we'll do is we'll double our stop loss, so we'll be stopped out of our short and enter a new long position. We're not going to trade a double size long. If you're trading one E-mini at the short entry here, you're going to have a buy stop for 2 contracts. So your short contract, your one short gets closed and you open 1 contract long. We are not going to add to losers and we are not going to martingale after a loss. And that's it. So hopefully I'll be feeling better on Monday, do a little better job for you than I did yesterday or today. And again, I'll do the MeBob review tonight. I'm just going to talk about the MeBob, and I'll review this little bit right here. We have 2 MeBob trades. It's after 11 a.m. I would not be taking any more MeBob entries anyway after noon. If you recall, I have my chart. My MeBob template now prints a red vertical line alerting me to stop MeBobbing for the day. And I would take another MeBob trade today if we get one in the next hour. But I'm just not feeling very well. I'm going to stop the recording, get it uploaded to YouTube, and I'll see you guys for the review at the end of the day. Trade well, good luck.